The Wall Street Crossover Show. Excuse me, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. Gives me great pleasure to reintroduce Mr. Darren Sinden, market commentator for Admiral Markets.
Good afternoon, Nick.
How the devil are you? I'm
very well, thank you.
Coughing attack. I felt as if I was down in the pits, trading the old FTSE futures again. In terms of this week, quite a lot. Obviously, last week was a humongous week for the UK in terms of the general election. This week, we've got Bank of England, we've got nothing from the Federal Reserve, we've got Greece, we've had the non-farm payrolls. Is there anything that you're looking forward to with particular interest?
Well, I think you've outlined the main key points today. We actually had the Bank of England announcement, as we'll see in a moment. Unusually on a Monday, I guess that was down to the early spring bank holiday. They moved
right.
the day. No, I think we'll have to take this week, probably give us a chance to catch our breath, shall we say, after what was a very hectic week with a few late nights after the election on Thursday. So a chance perhaps to catch our breath. But as you say, there's never a dull moment in the markets, and there'll still be plenty for us to keep an eye on going through the week.
Understood. Okay, without further ado, let's go through a number of slides that we've pre-prepared, or you've pre-prepared. First one, data released over the European session. Well, what's caught your attention this morning?
Well, once again, I've dipped into stuff that's come out prior to the European session. In fact, this new headline news came out yesterday, and that's that China has cut both one-year lending and one-year deposit rates by 25 basis points in a further stimulus move. So if you remember, it trimmed its reserve ratio requirements recently. It's tried to encourage banks to lend more, and here it's trying to, I guess by cutting interest rates, is trying to discourage people from saving, try and get the money pumping back into the economy because they're scared of a hard landing. No two ways about that. But the stock market in China took that news very well. It seems that they're taking the view that the People's Bank of China will do what's necessary, and Shanghai stocks rallied by 3.05%, so a really decent bounce in that market there. Closer to home, as you alluded to, we had...
I assume that was later in the week, I've got to say.
No, it was today at 12 o'clock, and there was no change to interest rates and no change to QE. Minutes for the meeting will be published on May the 20th, and that's when we'll find out what the Monetary Policy Committee was thinking. You also rightly pointed out, Nick, that there's ongoing discussions about Greece. There's another meeting in Brussels today between the Eurozone and the Greeks. There's also €750 million repayment looming to the IMF. In fact, I think I'm right in saying that falls due tomorrow. Now, they paid the last IMF instalment, €200 million, I believe. This is somewhat more substantial. Whether they've got the money or not for that remains to be seen. I suspect they can probably find it, having gathered money in from regional authorities to the Greek government proper in Athens. But it rumbles on, and it's still a big thorn in the side of the European Union and the Eurozone.
Understood. Okay, let's take a look at the FTSE 100 movers.
Okay, just picked out a few stocks here, but it was emblematic really of what's going on today. Marginally better the FTSE, Barratt Developments and the other house builders up in sort of a post-election afterglow. So Barratt's up by about 1.46%. Taylor Wimpey, another that was very strong this morning as well. Miners, I picked out BHP Billiton here, but Anglo American and Rio are also
same theme.
Yes, indeed. China stimulus news aids the sector. Obviously, as we said before, the miners are the big suppliers of raw materials to China, their biggest customer. Anything that's positive for China should be positive for the miners. And then Tesco's, they're up around 1.88%. Two stories here, really. First of all, a piece in the Sunday Times yesterday suggesting that Nielsen, the big US ratings agency, could be interested in getting involved in the auction for their club card business, and that would pit them potentially against WPP. So in an auction, never a bad thing to have two big international businesses vying for the asset. And secondly, there was talk today of a merger between two big European retailers, Ahold and Delhaize, which also doesn't hurt Tesco's valuation either. So they're at 1.88% today.
Understood. Okay, let's take a look at the M&A rumours and movers this morning.
Well, what I've done here, Nick, is slightly step outside the box and look at a sector away from the US and Europe, and look at Japanese consumer electronics. Why have I picked out these two this sector, because the two big stories here that have come hard on each other's tails. First of all, Toshiba, which for those of you who follow Japanese stocks is ticker 6502, cancelled its guidance, basically withdrew it completely, cancelled its dividend and cancelled its full-year figures for May, which were due to be reported in May. It's blamed accountancy issues and the non-reporting of costs on various projects, and the shares were down 17%. Wow. This issue was flagged first of all in April when a letter to shareholders, but that now seems to have come to a bit of a head, and the scale of the problems isn't yet clear.
Still unclear.
Smacks of the bad old days of poor corporate governance in Japan. But that's literally at the same time, Sharp, another consumer electronics company that we're all probably familiar with, their shares are down 25% as the company says it may have to issue new preferred stock and take a massive write-down, latest in a series of financial problems for the company that have dogged it really since the credit crunch, and its long-term future could actually now be in doubt. So, you know, consumer electronics, once the sort of the mainstay of the Japanese economy, and
lagging,
and now very much you know, in real problems in that area.
Okay. So let's take a look at the US data points to keep an eye on today.
Right, a relatively quiet day as far as US data is concerned. The Red Book chain store sales is probably the highlight. I just wanted to point out that these figures are really, this is sort of a gauge really of consumer confidence if you want. And we've seen a real sharp drop off since a 5.4% reading in December 14. We've seen growth since then, but
slower rate.
Slower. And so if you look at the chart, it very much is like a ski slope going down. So we look for a positive read there, but it's a question of how positive. Then a small business optimism index, the National Federation of Independent Businesses, the AIR Optimism Index for April, looking for a read of 96 versus a previous read of 95.2. It's quite a minor figure, but on a dull day, one may as well have a look at it. And in terms of earnings, we've got a bit of a light schedule there. Just 25 US companies reported today, most of them small fry, but still worth being aware of.
Understood. Okay, let's take a look at the US pre-market movers and some chart levels for you.
Okay, well the stock that's taken my eye here is Groupon, up by around 3.17% pre-market, had greater than average volumes on Friday, and Breen Capital, a US broker, reiterated its target price of $11 for the stock. But say it's better.
These are the vouchers, discounted.
Exactly, yeah, vouchers and deals. That for retailers and service providers. It's a bit of a Marmite stock, love it or hate it, but I just find it interesting. It's up 3% again today. No obvious story, but given the type of stock it is, probably one to keep a close eye on. GRPN is the ticker there in the States. And in terms of levels to watch today, in euro dollar, 111.31 to the downside, 112.09 on the upside. For those looking at the indices, the S&P 2092 on the downside, 2126 on the upside, and in the Dow, 17,933 your downside, 18,206 your upside level. We come back to the currencies. Dollar yen, 119.58 our downside level, 120.23 on the upside. Aussie dollar, 78.75 the downside, 79.14 the upside against the US dollar, and cable 153.80 on the downside and 154.58 to the upside at the moment.
Excellent. Okay, Darren Sinden, market commentator, Admiral Markets. Thank you for your continued support. An excellent morning wrap. We'll be back same time, 1 o'clock tomorrow. If there's anything that you think we've missed, please get in touch. We'd like to add to it, change it. We're open for people's
feedback and suggestions. Yeah.
There you go, Darren. Thank you again. Have a good day, people.